Hi, Andrew Bell with you, and today I'm trying to share some thoughts on just some of the confusion that's making it difficult for forecasters, let alone us ordinary citizens, to understand what's happening in the real estate market. So much of forecasting is consistently wrong at present, and we're really in that territory we have never kind of experienced before. So I'm sharing you some thoughts from Ray White's chief economist, Nerida Conisbee, who is the most quoted economist in Australia on real estate. Nerida pointed out that capital city house prices fell by just 6.4% last year, which is of course dramatically different from the 20 to 30% that many had forecast, fundamentally off the back of history, which has always told us that when rising interest rates occur, there's significant drops in property values. If we look at what's happening globally, we see real estate prices are on the move upwards once again, despite inflation, despite high interest rates, and of course, some places are already in recession, yet prices are going up. So the question is, what are the factors that are really making it quite confusing at the moment? Well, one is that people assume that house price movements are consistently driven by the same things. Reality is, as I've discussed previously over the years, there are 5 factors that drive the real estate market, and different factors come into play at different stages. There's a tendency to overemphasise one factor over another, such as interest rates at present, whilst ignoring the supply issue, which we know is incredibly short at the moment, which is part of the reason why we're seeing these record highs. There's also the assumption that what drove prices up will also push them back down again. During the pandemic, Australia lost people to overseas locations and population growth was very, very low. At the same time, prices increased dramatically, primarily because the cost of finance was so cheap and people weren't spending money on other things. Now, as interest rates have started to rise, many just assumed that prices would move down. Whilst this happened a bit at the beginning, the bounce back in population growth has prevented a dramatic fall. Third factor is that people assume that all housing markets are the same. House prices can be falling in one city, but increasing in another. Even more in a local scene, this can happen in adjacent suburbs. Different markets have different drivers. For example, a city like Perth is more sensitive to the commodity markets, whereas Melbourne and Sydney are more sensitive and more closely aligned with interest rates. Have a look at small regional towns and the addition of perhaps a new employer or strong agricultural years, and that can make a big difference in those areas. Fourth is that there is a perception that house prices swing around dramatically, perhaps even quickly, but the cost of transacting and the speed of sale and settlement make housing a far less volatile investment as opposed to the share market, which can be traded in a matter of minutes. This makes house prices far less volatile to changing conditions. Next consideration is that housing markets are different from financial markets. Financial factors do drive housing markets to a degree, but demographic change is also a big factor. In fact, many changes to property markets beyond, say, the residential aspect of the property market are influenced by changes to the way people live and work. Shopping centres can do well in a poor retail environment if there's a strong population growth around that area. Industrial properties are doing well because of the change in the way we are shopping. Nerida also points out that we don't truly understand the consumer response when estimating future directions. A building model to forecast house prices is difficult. A simple model utilising population growth, numbers of dwellings and cost of finance will ignore a lot of what drives consumers when buying and selling homes. Selling the family home is a big deal, and spending on other things will be reduced first before selling. For example, in this cycle, many investors have not sold because rents have increased so much, helping with mortgage payments. And Nerida also wrapped up by saying that we often underestimate long-term trends. Long-term preference change drive property markets. The pandemic led to the highest movement to regional areas ever recorded in Australia, leading many to believe that regional pricing would come back down quickly as pandemic restrictions faded. This hasn't happened. It reflects that this regional movement was already happening prior to the pandemic, just sped up. It also reflects that it wasn't just pandemic movements that led to price rises, but strong performances in mining and agriculture. So it's a brave person who can claim that they know what the future holds, and probably the biggest battle at the moment is between rising demand for real estate, particularly through population growth, but also interstate migration in many areas, and of course the supply factor. The fact is that people have to somehow fund their purchases of real estate or continue to raise the money to meet their repayments on funding. For my thoughts, the battle will be determined by just how long interest rates stay high, and no one can quite yet determine how long that is when we're not even quite sure when we're going to reach the peak in interest rates. So there's plenty to keep our finger on the pulse with there as we move into the busy second half of the year. And with spring upon us, or virtually on our doorstep, it does signal it's the next strong selling season of the year. If you want to take advantage of the upswing in real estate market, reach out to us as we have a very special auction on the 28th of September, and we're taking bookings now. Details are on screen on how to contact us. Our spring season is always a great time to capitalise on the real estate market, and based on our recent auction results, which are quite extraordinary in setting the pace around the nation, there's a strong shortage on the market right now, and so therefore will be a really great opportunity to take advantage of that market. Well, that's it for this fortnight. Warmest regards for now. Be with you in 2 weeks' time.